Hello and welcome to today's edition of Charting the Markets. Here with me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, we do have that all-important US CPI data, inflation data. Obviously, inflation being a key theme in the market at this point in time as it dictates the pace of monetary tightening. At this point in time, we're expecting inflation or CPI year-on-year figure to come in about 5%. So slowly still ticking back, still above Reserve Banks, the Federal Reserve's targeted 2% ceiling, but hopefully moving in the right direction. Let's look at some charts, starting off with the dollar, US dollar basket. Long-term trend for that dollar basket does still remain down, although we can say in the short term, we are sitting in a bit of a range-bound environment, sitting between levels 100.50 and 102.00. Because that longer-term trend bias is down, we are still looking for reasons to short that. Shortable opportunities might be considered on a bearish reversal at that range resistance at 102.00, or alternatively on a downside break of that 100.50 mark. In that situation, it'd be targeted to move back down to about 99.20. In the event that we do have a break above 102.00, we wouldn't be looking at getting long on the dollar index just yet. We'd see how far that really takes us. As long as we're still trading below that 200-day simple moving average and we get a bit of a bearish reversal, we'd also be looking for short entry there. So we're respecting the trend at this stage, keeping a short bias to trades, looking for either a bearish reversal at range resistance, a downside break of range support, or in the event that we have a move above this range resistance, waiting for that to play out and looking for a bearish reversal at that point. Looking at the euro dollar now. Inversely to the US dollar basket, we see that there is a longer term uptrend that is firmly in place. You can see with those moving averages, we have proper order, the 20-day simple moving average above the 50-day simple moving average, which is above that 200-day simple moving average. So that's we do have the price now moving into a bit of a consolidation in the short term, pulling back from what looks like could be overbought territory at this point in time. Just correcting that stochastic to the default, which usually uses about 14 on that. So we have had a bit of a correction from overbought territory, and that's through that sideways consolidation. So we want to see this move lower end with some type of bullish reversals. Price just ticking back, saying that this correction, whether it's a sideways correction or a bit of a pullback, waiting for it to end with just a tick back in price, in which case we'll start targeting back towards this hard 110. 1.1087 and then through there 1.1180. Even if this pullback was to take us below this support level here at 1.0855, we'd still be waiting for weakness to play out. We wouldn't be looking at shorting that. Our major low in consideration here is about 1.05130. Now, that marks a major low, and it does seem to find confluence with that 200-day simple moving average. So only when we start moving below there, we'll start consider changing our trend bias for trades on the euro dollar. Pound euro is sitting and it's testing resistance at this point in time, being quite resilient, but we are looking overbought. So ideally, traders might want to see a bit of a pullback from overbought territory. That pullback to end with a bullish price reversal before looking for long entry. Support levels could be considered at 1.2515. This line here, if I just extend that a little bit, or towards this trend line support, or even lower down towards this 1.2343 level. But we do want to see that price pulling back and then just ticking back before committing on the long side. Alternatively, could have a break. That'll be a bit of a higher risk trade, especially when you're sitting in overbought territory like that, like we are at this stage. But if we do get a break above there, our next upside resistance target is sitting about 1.29985. Moving over to some indices now, and starting off with US tech, the Nasdaq 100. Longer term trend bias is up. We do still have that bullish lie of the 50 and 200-day simple moving averages. We do have a bit of a range that is formed in the near term. That range sitting somewhere between levels 12,900 and 13,290. Now we have been testing this resistance level that we've labeled here. At the moment, we do look to be like reversing off of that level. So again, with that trend, we're looking to keep a long bias. Long entries considered on a break above resistance at 13,290 is what we see acting as resistance right now, in which case we start targeting move towards 13,750. In the event of a pullback, we're hoping to see a bullish price reversal closer towards 12,900 instead, where we'll be looking for a long entry. But we're not looking at picking tops. We're not looking at trying to short the index from current levels because we are respecting that longer term uptrend that is in place. The Nasdaq has been an outperforming index in 2023 so far. But certainly it has been the strongest of the major US indices, albeit off a low base of a year of underperformance in 2022. But now 2023 has seen the return of the Nasdaq, or certainly in the early part of the year. S&P 500, longer term trend bias is considered up, but in the short to medium term, we're definitely sitting in a bit of a range bound consolidation, a trading range at this point in time. So a bit of no man's land right now. We're sitting in the middle of that range. So we prefer to see price movements towards the lower end of support, just ticking back. We'd like to be looking at a bullish reversal of 4,050 for long entry on the US 500 or the S&P 500, or alternatively an upside breakout. But from current levels, we are pulling back at this point in time. So support target from the pullback 4,050. We're not looking at shorting it. We're respecting that longer term bias to the upside. We are, however, waiting for that to end, waiting for a bullish reversal before considering long entry on the S&P 500. Germany 40, or the DAX 40, looking a little bit overbought at current levels, has been testing new high territory, at least new short-term high territory, and is faltering a little bit there. There's no conviction in the selling at this point in time. We are expecting markets some volatility to pick up as we do move into this afternoon. We do see that US inflation data, which obviously will affect global markets. The way the technicals stand right now is that the longer term trend is firmly up. We are really just coming off short-term highs, but we are pulling back at this point in time. Our support level targets there initially would be 15,715, which was a previous level of resistance. Now it's acting support. If that doesn't hold, we'd look towards trend line support there. What we're doing now is we're hoping for any type of bullish reversal of one of these levels for long entry again, and then we're looking for a retest of the high and possibly that 16,300 level on the DAX. FTSE 100, arguably an uptrend, a longer term uptrend in place. We could argue maybe that it's a bit of a range bound environment. We have, we've failed to break this high in this last move higher. And so we do seem to have a bit more of a broad sideways range bound environment on the FTSE 100 at this point in time. We had a bit of a rebound, a bullish reversal here. That unfortunately hasn't really worked out. We had this lovely Morningstar type reversal pattern here off the 7,700 level. And from oversold territory, it was looking good technically, but it hasn't really manifested how we'd like it. That would have called for a move to about 7,870. We can see that that is failing right now, and we are now moving to retest that 7,700 level. If we get a rebound and a little tick back in price there, we'd consider the same type of trade, looking for long entry targeting 7,870 initially. But if that level doesn't hold, that would call for some further downside, with the next level of support considered at 7,560. Moving over to some commodities now. Brent crude, longer term trend for Brent remains down at this point in time. What is happening is we do have a bit of a rebound forming, and that rebound is coming from oversold territory. That's after attempt to quite close towards our lowest support level of 69.50. I think we had a low there, 71.30, but certainly there has been some sharp downside on Brent crude. At the moment, though, we are still in that rebound stage. Our view here is waiting for that rebound to end, see where it takes us. Looking for a bearish reversal, maybe between 79.50 and 80.80, in which case we'd look to re-enter short positions and then targeting our lower levels once again. That would be about 72.50 and then 71.30 as initial targets on the downside. But we need to wait for this strength at the moment, this rebound from oversold territory to play out, lose its momentum, give us a sign that it's reversing before committing. If we do get a break above that 80.80 level, we still wouldn't be looking at longs just yet. Our levels for longs is we're going to break this major high at about 88.70. So still really quite a long way to go before we change our bias to trades on Brent crude. Spot gold, this trend is firmly up. One of the better performing commodities at this point in time. Some safe haven appeal. We've had generally a weaker dollar, which has supported prices on the dollar, on gold. So that long-term trend is up. We've recently just made that new high. We took out that previous high of 2050, which was a target from this reversal off support at 1980. We reached a higher there and we've sold off a little bit. Now we look to be resuming that. So we've had this pullback. That pullback looks to have ended. It's not the most convincing bullish reversal there, but if we're picking a side, we're picking to the upside right now. And the targets on the upside, again, 2050 and then 2080. That's $2,080 per barrel. I think if you are looking at long entry from here, you might want to have a relatively tight stop loss and a close below about $2,015 an ounce. Copper is really not gone as well as what we had hoped for a little while ago. It started the year off quite strong. That rally has petered out. Obviously, a reflection of what we expect, or the economic picture, concerns of global recession, or at least slowing growth. Copper said to be a leading indicator of economic health. We are testing now support. We're moving back towards support. I think we're moving more into a range-bound environment. We are still above that 200-day simple moving average. We can see we really are just, not really making higher highs or lower lows at this point in time. We're pulling back to find test support there, about $8,430 per metric ton. We're going to watch to see how this holds that level. If we do see a close below that, we start targeting $8,200 per metric ton. And obviously, if we're looking at copper, we look at the underlying miners, how that would affect those miners as well. The likes of Glencore, South 32, Rio Tinto, to name a few. Alternatively, we're watching this level. We're looking for it to break or bounce at this point in time. At the moment, there's no indication that the price is turning around. It is pulling back, although we are oversold at this point in time. So one to watch. We're watching this level quite closely, 8,430 being a key level for copper right now. Because through that, then we start breaking below that 200-day simple moving average. That really does affect our trend assumptions on that leading indicator of economic health. Right, that's all the charts from me. Please do remember we have that very important CPI inflation data out of the US this afternoon, likely to be a high impact catalyst for markets. From Murison, thank you very much for watching.